it's Keri TV, and I am so lucky today. I have my wealth of mortgage information person, guru, here with me, Jason Vanderpoort. So you do not want to miss today's episode if you are in the market to buy a home. Stay tuned. Even when we're not working together, I'm always asking him questions, and he's so amazing because he's always there to help me and my clients out. Luckily, we get to do a lot of deals together. Yes, thank you for being here today on Keri TV.
Of course, honored to be here.
Yes.
That's awesome.
So Jason's got some information for us about what's happening in the market. So first, I know there's all this talk about the new conforming loan limits. So we're super excited about that. Fill us in.
Yeah, I think it's great. So these new conforming loan limits we're in a high cost area in Los Angeles County.
Yes, it is,
so
high cost area.
Yeah, so I like to preface this though too, is when your clients are talking to mortgage professionals and say they're buying outside of LA, they need to find out what that high balance conforming loan limit is. It's different versus Orange County, San Diego County versus LA. So in LA County, the max is $726,000. Yeah, and it's great because it really helped people to get into properties that, you know, a little bit more purchasing power.
Right.
50,000 more because it was 680.
Okay, so it went from 680 up to 730.
Yeah,
wow,
so that's
great.
Incredible. You know, $50,000 more in a property, they might find something they really love.
Yes.
And they can still do that 5% down where it's a harder loan to get if they're going to go, you know, into those portfolio jumbo type products.
Because conforming loans allow a little bit more leniency for clients.
Leniency on the reserves, on their qualifications. Yep.
People may make a lot of money but not have a lot of savings or the reserves needed for certain loans. So it's really good to have a lot of different options. Yeah. And then we know recently, one of the second points we wanted to talk about today, there were some changes on December 19th that impact anybody getting a mortgage. So tell us a little bit about those.
The feds are meeting December 19th.
Okay.
Yep, so they're meeting December 19th. And
this may come out in January, so in the past.
So they're they're meeting as they have throughout the year, right, a few times, and the rumor is they're going to increase the prime index Fed funds rate again by 0.25%.
The Fed rumored they're increasing by a quarter point.
Yep,
quarter point?
0.25%.
Okay, that's huge, you guys.
Yes.
How will this affect us?
It'll affect your credit cards right away, so check out those credit cards and home equity lines.
The credit cards! I get points, miles.
So your percentage will go up on that. But it doesn't always affect the mortgage interest rates, like a 30-year fixed or an ARM. It already might be built into it.
Okay.
Sometimes they're preparing for it, so they figure, okay, well, the rates maybe have gone up a week prior or stay stagnant because they're already built in, assuming that's going to happen. Okay. So a lot of people think, oh, 0.25%. They'll call me up and say, hey, Jason, rates they will go from 4 to 4.25. No, that doesn't happen. It's different on a 30-year fixed mortgage. So good for them to know, but still keep an eye on it.
Yes, depends on what type of loan you're getting.
Yep, and just depends on how the market's going to react to it.
And how the market reacts. Okay, you never really predict it.
Yeah.
These are things you have to be watching for, whether you're moving up from a smaller place to a bigger place or you're the first time in the market. These are all the trends you need to constantly be keeping in touch with your agent and your mortgage broker about, because these things impact you.
Oh,
they're huge.
Oh, yeah. I mean, you touch on a good point on interest rates.
Yeah, exactly.
Right? It's good for buyers to know this when they're talking to their mortgage professional, when they're looking for properties with you. It's good for them to know, like, okay, let's say their max purchase price is $1 million and their rate's 4%. Well, if that rate goes from 4% to 5%, just 1% up, they lose about 10% of their purchasing power. So that $1 million property they loved, nothing's changed. Their income's the same. Everything's the same.
Wow.
They went from $1 million to $900,000 overnight once that rate hits.
So say you're out looking for a property and $1 million is your max, and you're right there and you're writing offers on things, you're looking at things, and you're just not quite there on what you want. Maybe if you went to $1,050,000 or $1,100,000 and get it done. By the points going up, by the point going up 1 point, or the rate going up 1 point, you just, $900,000 is what you're looking at. So you now need another $150,000, $200,000 to really get what you want. So this has a huge impact. It may have a point, 1 point, doesn't feel like much. This is one of the most impactful things about your buying power.
Yeah, I think that's why I always tell people, hey, if you love a property, you find a property that you just want to make an offer on, don't wait. Try to time the market, because the rates will go. I've seen rates change overnight or within a week, within 0.5%. But still, they've gone up. They've gone down and up. It's been like this.
Yes, and they've been kept low for so long.
It's inevitable.
So I have a really good question. So a lot of the people that come to me, they feel like they can't qualify, they don't have enough money, or whatever it is. So are there loan programs that I can share with people that they may not know about?
Great question.
So give some tips on how people could get into a home when they don't make a standard wage.
Yeah, so there's so many loan programs out there. I mean, lenders are really trying to lend right now. A lot of people
lenders want to lend.
Yeah, they really do. And besides full documentation, which is your tax returns, your pay stubs, your income, that's your normal,
blood
conventional, exactly, jumbo type loans. The best rates, but not everybody falls in that category. A lot of people are self-employed and write a lot off on their taxes.
Yes.
So there's great loans for these people. They're called bank statement loans.
Sorry, does anybody write a lot off on their taxes out there? Not me. Yeah.
Sorry.
I made $5 last year.
Right?
Okay, sorry to interrupt.
We don't want to pay you off, but it's true. We don't want to pay Uncle Sam, and I get it, because I'm in that same boat.
Yeah.
So finally, lenders are getting it, and they're saying, well, okay, put more down payment.
Okay.
And there's actually some that are becoming even more aggressive, like even 20% down payment. But typically, it's like 30% on these bank statement loan programs.
Okay.
And but it gets them in the property. People understand this. Like, Jason, I love this property. How can I make this happen?
How can I make it happen?
I've got a bunch of money in the bank, but my tax returns show nothing. Hey, we've got great loan programs for you. So many investors doing these bank statement programs. Even stated income's coming back. And a lot of people go, oh gosh, I remember the meltdown. They get nervous when they hear that, but banks are doing their due diligence now so they don't get in the trouble that they did before. At least that's what we hope, and that's what they're saying. So there are some true stated income products coming out here. So we went over the bank statement program, stated income, and actually another one is a lot of people talk, it's full documentation loans, but a lot of people ask me, Jason, I need 20% down, right?
Right, that's what people would think, you need 20% down.
Many people still do, they don't.
It's amazing.
5%, 10%. I know there's, investors can do 10% down to 1.5, 2 million, 3 million, depending on the investor.
So it's never too early to get in front of your mortgage
Never.
rep. Never too early. If you're not buying for a year, people say that to me all the time, like, oh, I'm not looking for another 6 months. I'm like, talk to them.
Please.
Look at your credit. Look at your income. What do you need to save? What type of property options are out there for you?
There's so many hurdles people don't understand, and rightfully so. They shouldn't know this until we educate them. Our job is to educate these people and help them. And I talk and deal with clients that take 3 years to buy, and that's fine, and that's okay, right? You get prepared, and
we're here forever.
Exactly. I'm not going anywhere.
Jason's team's really good about letting my clients know what not to do during escrow, but some of these are really surprising. So give us a few things to leave today, what not to do when you're in escrow.
Definitely.
Getting a loan.
Great question, because this happens quite a bit. So
get a boat.
One that, definitely we'll lead with that. Don't buy big ticket items when you're purchasing a property.
Okay.
Because it can hurt your qualification.
Yeah.
You're qualifying for a property, what you're doing is you're adding more debt. So it can hurt that situation. Yeah. I mean, even as little as a washer, dryer, refrigerator, I say buy those appliances after you close escrow. Make sure you have the money aside for it. Go and look for them. It's exciting. Do it. Have fun, but just don't buy it yet. Or if you're thinking about it, if you're like got a great deal, if you're thinking about it, call up your mortgage professional, say, hey, and they might go, you're so strongly qualified, it's okay to purchase that. Typically they say don't, but communication is so important. So, but try to stay away from, the cardinal rule is stay away from big ticket items.
No big ticket items.
No new cars.
No boats, washer dryers, diamond rings.
Congratulations, by the way.
Yes, right? It's happening.
Yeah, that's one of them. Don't move money around. Moving money, a lot of people will start moving money around. And it's your money, you can do it, but it's like when you move money around, it becomes more of a headache during the loan process.
Yeah, they have to trace it, track it, where'd that go. Yeah. People feel like they're going through the Spanish Inquisition when they're getting a loan.
And I feel bad for them.
Process, but if they listen to these points,
it could be a lot easier.
That's what our job is.
Less turbulence, we call it. We're going to have some turbulence in this flight, but there's less turbulence if you listen to us.
Buckle up.
Yeah, exactly. But yeah, don't move the money around, and don't pay off bills.
Don't pay off bills.
I get this all the time.
I wouldn't know that.
Yeah, Jason, I want to buy, but I'm waiting 6 months. I'm going to pay off all my credit cards.
Yeah.
Well, wait a second. Hold on. Let's talk about your qualification, because you might be doing 10% down. All of a sudden you paid off your bills. Yeah, it might help you qualify, but you don't have enough money for down payment and closing costs and reserves possibly.
That's huge.
Yeah.
I would think the same thing.
Yeah, and I get it. They think, hey, pay off my debt. I'll be a strong and qualified client. It's not always the case. And if it is, then we get in early, and then we have to maybe pay off just a couple bills to get to that right debt to income ratio to qualify.
That makes sense.
Yeah. The last one I can say is jobs. It seems like common sense,
jobs.
But people have done it, and that's where they switch jobs. Okay,
it's happened with us many times.
Yeah, so it's like,
wait, you quit? What? Can you get your job back?
Yeah, it's like in the job, if it sucks, it sucks. Keep it until it's over, and then go
30 days. 30 days.
Yep.
Yeah.
And if we're talking early enough and say, Jason, I'm getting an offer for a killer job and making more money, good. You can do that, actually, as long as we know, okay, you need this, we need one pay stub, we need a contract. Just communication again.
And the fourth one, know that your mortgage broker, like a real estate agent, is on your team, and they will prep you and put you in the best position possible to get you into your home. So then you can do painting and decorating and make your memories. So we're so excited to have had Jason here today. It was so informative. I always learn something new. And just remember to speak to your experts. We are here to help.
Yes, we are. Definitely. Yes. That's our job.
Yes, that's our job. So thank you again.
We love what we do.
Let's go out and get some people into homes.
Yeah, thanks for the opportunity.
Yes.
Thanks, guys.
Happy New Year, everybody.
Yes.
Cheers.